going to be treating an interesting topic this afternoon, investing wisely. Godwin Kojo Odoom is investment banker with SAS Finance Group. He joins us in the studio to talk about this. Welcome to the marketplace. What does it mean to invest wisely?
Okay, so if we say investing wisely, you will have to first understand what investing is. So investing is you putting money into an asset to acquire it, or either to invest in it so that you get returns at the end of it, either to build wealth or to also protect yourself against uncertainties in the future. So if you say investing wisely, it's about money. So the wise way is to keep your money safe, to make returns on it, and then to also grow wealth.
Emphasis on wise, because there's not so much money to go around these days. So when you have money, you need to put it somewhere that you are confident will bring you returns. And so what are some of the questions that people need to ask themselves before they make an investment, do you think?
Okay, so you need to find out your investment goal, okay? Because in every investing, just like football game, you need to see the post where you are going to, and then you need to strategize how to get to it. Okay, so you need to understand your investing goal, first of all, and then that will guide you how much money you are able to let go in planning towards achieving the goal that you want to get with investing.
Yes.
You would also have to understand what you are investing in, which is very important, because you can't put money into something that you don't know how you are going to get your returns from it, or how the business is even operated. So it's mostly good that you understand the business as well. And then along the line, there are different ways of investing. You could either be an active investor or you could be a passive investor, okay, depending on the time you have on your hands. If you want to be an active investor, it's all about you always being on your investments, like basically close to a broker, because you
always watching.
Always watching. Yeah, that's a good word. And then there's the passive for maybe someone who has a 9 to 5 but still wants to create wealth.
Okay.
That person can always see a broker who is their duty to spend time to be able to turn around the funds for you and all that.
I mean, you touched on a very important subject of understanding what the investment scheme is. I mean, where can you go to get an understanding of an investment scheme?
Okay, so in the investing space in Ghana, we have brokers like Strategic African Securities, where I work with. We are mandated to give investment advice, licensed by the GSE as well, and then the SEC. So we give investment advice on where to put your money and then how to make the best of returns. So anytime you want to start investing, you can either go online, read for yourself, but if you want face-to-face, you should always find a broker.
Oh, wow. Yeah. So next question, is investment for everyone? I'm asking this because some people feel, well, I don't earn much, so what's with putting my money somewhere? I'd rather save my money than invest, stuff like that.
Yeah, so it's always good to make money on your money. Yeah, they always say, let your money work for you. So whether it's a CD, you never know where the CD will go to, although depreciation and all that, but you never know where the CD will go to. Okay, you can keep a CD a day. You can build your base before you really start investing. You need to be good at saving, where you have some investable income that you want to put into the investment that you are doing. So with any funds that you have, whether you are a 9 to 5 worker, whether you are informal worker, so long as you make some CDs, it's good to always put some aside as an investment for your future, for your short-term, medium-term, long-term goals.
Yeah, so everyone can invest. It doesn't matter how much you earn. Next question is where to invest. We saw what happened last year. People invested money in places, and then in the height of the economic turmoil, they were feeling quite disappointed. So, I mean, tell us a bit more about some of the investment schemes around that people can take advantage of.
Okay, so when it comes to this, you have to look at how much returns you are looking at making. Okay, if you have a lot of risk appetite, you assess your risks, and you want to make maybe 100% in 3 months, 6 months, you need to go for higher risk securities. So we have higher risk securities like stocks, real estate, which can give you higher returns in a short possible time. We also have mutual funds for someone who would want a nice blend of equity and then fixed income in their portfolio. And then we also have the fixed income, like the Treasury Bills, which is being traded the most at the moment. So big banks, everyone is doing T-bills. So
would you say that's the best place to invest right now? Because
it's about returns.
Okay.
When I mentioned that your risks that you want to assess. So looking at the riskiness of Treasury Bills now, that's the returns that you are getting. So it's about the returns. If you think the risk over there is good enough for you compared to the returns you are getting, then yeah.
You keep talking about risks. I'm sure people, that's one of the reasons why people are not keen on investing, because of the risk associated with it. How scary is it?
Okay, so for we investment bankers, risk is equal to return. I can just say that.
Risk is equal to return.
It's equal to return. So the higher risks, the higher return. So of course, we are in a very challenging investing environment at the moment with investable disposable income very low at the moment. We've seen the GSE market, trading 50% lower compared to last year. The fixed income market doing the same as well. So what I can say there is that it will be good to have a nice blend, okay, to have a good way of investing going forward.
You should have a nice blend. So, there are risks, but it's not always risky, is it? I'm just saying this because, bottom line, we've seen it happen last year where people have invested their monies and they're expecting some returns and then they are not getting it. It's creating a whole issue and it's affecting confidence and trust in some of these investments.
For securities, something like a T-bill like this, when you buy it, you know what you are getting at the end. Okay, so the risk is just hoping that the government doesn't default when it comes to something like a T-bill. So if you feel your risk appetite is in line with a government not defaulting, then you can go for T-bills. If you believe in a listed company like, let's say, MTN, Total, GCB, very strong companies, you can go there to, with understanding of the type of business they are doing, understanding of how profitable they are, and the returns you are expecting to get from them. And you will be good.
Okay. I believe we are going to be talking about this tomorrow. In case you lose money, are you able to get your money back, the role of the regulator and all of that. But in 30 seconds before we move out, just for our audience who are watching, any investment tip for 2024?
Okay. So I will say that start early. At any age that you would want to invest, it will be good to start early. There's an adage that the best time to do something, if it wasn't 100 years ago, is today.
Okay.
So if it's your first time you are getting to know about investments, it will be good to start today. It will really help you build wealth for the future, to also secure your financial independence as well.
Godwin Kojo Odoom, an investment banker with SAS Finance Group. Good to see you. We'll see you tomorrow as well. And this is The Marketplace. Thanks for watching, everyone.